We're told that there's been an acceleration in FDI to Africa. What's driving this investment?
I think it's basically Africa is increasingly positioning itself as the best place to put your money. I think we have seen that valuations throughout the world has gone up, and Africa is still rather the most interesting, most attractive place. And you see that the new countries like India and China are increasingly active in Africa.
In terms of investment strategies, I mean, we've seen FDI coming in at about $16 billion, which is much more than the $1.8 billion that came through private equity in recent years. What makes it attractive to invest in this way, do you think?
I think a lot of investors, big investors, you have to understand that big part of the FDI flows are, for example, M&A transactions. There are big companies buying into Africa, and a recent deal is like the Bharti deal in terms of a telecom, that they buy in the Zain telecom assets. So there's a bulk of the M&A transactions drive the FDI flows. And the other one is more infrastructure driven. So those are like the big tickets. The private equity space in general, you see that we have the same issue as the general private equity industry. There's not a lot of flows to private equity funds in general. Just to give you a note, is many of the investors who are speaking to, they are currently trying to get their money back from the big buyout private equity funds, and they are a bit stuck. So before the global private equity industry gets a bit more healthy, I think we will have less private equity flows to Africa.
Okay, others choose to invest through African treasuries or bonds, especially those issued by governments. Why is that an alternative way of doing it?
I think the fascinating thing about Africa today, at least, and it may not last for forever, but at least today you see interesting valuation points, whether it's in equities or fixed income or private equity. Now, just to give you an idea on the private equity space, the Nigerian government, when this goes out to the market and issues a 20-year bond, it gives investors 15% yield or 15% coupon. Now, that is something which is very exciting, especially if you know that the debt to GDP ratio of Nigeria is very low compared to the US. So basically, as an investor, I'm not saying something, probably saying the obvious, but where should you give your money, where should you put your money? In a country which has reserves and has a low debt to GDP ratio and also growing, or a country which is over leveraged. And increasingly investors are making this calculation to see, you know, where is the real value for investors.
Okay, we are told that one of the biggest weaknesses in Africa is that the corporate bond market and secondary markets aren't very well developed. And this is, I think, where we need to start growing investments, because we need a more dynamic private sector in Africa. And if we can't be attracting international capital, because it's also competing with government debt in terms of money being raised on the bond markets, it becomes a bit of a challenge. How can we deepen our markets for the African corporates to gain some of this investment?
I think you're absolutely right. I think that is one of the things which today is, let's say, the weakness is the liquidity of the market and the depth of the market. I think we are getting there. We are getting there partly because of internal drivers. So, for example, if you look at today in Africa, you have banks, you have insurance companies, you have pension funds who want also to invest in their capital markets, so they can get a good yield in terms of their investment. And what you also see today, which is quite fascinating, is that the spreads on the government bonds are coming down more quickly than on the corporate bonds. So basically, almost by definition, you see that the local investors at least start to give more money to the corporate bond. Now, and then you have also the external environments. Basically, the external environment is 20 years ago or 10 years ago, many of the current big emerging market countries used to be at the same situation where many African countries are today. So just give it a bit of time and you'll see a natural maturing of the market.
Just in terms of the strategy for investment, you mentioned valuations earlier on, and a lot of private equity players will tell you it's great to come into Africa because some of the market leaders, you get them as a very cheap asset, obviously because they're not very exposed. You get them at multiples of 6 to 8, but then the challenge becomes selling it after a period of time when you're wanting to get your returns through profit, and that's where you're not making money in Africa compared to how you would do in Asia or in Latin America. Your views?
I think it really depends on what sector you play. For example, as a fund, our fund, the private equity fund that we're currently launching, is a pure food and beverages fund. So basically, that is a sector which you can access. You can access because the big guys like the Nestle's and the Coca-Colas of this world are looking for companies that they can buy when they reach a critical stage. You also, within even this food and beverages sector, getting these type of companies to the local stock markets, which, as you rightly said, they are not there yet, but there is a demand for simple companies that people can understand, and a food and beverage company is something that people can hold on to. So basically, I think if you do a private equity investment in a big infrastructure play or a mining play, or even those are sectors which are more difficult to IPO or to do a trade sale in. But if you keep it simple and go to sectors which are, let's say, more basic sectors, then the opportunity to access it, actually, we think, at least today, is already there.
Let's look at investment trends and who are the interested parties. Obviously, a big growth in interest from Asia, most notably China. But we're also hearing about new entrants, people investing from the Philippines, from the Middle East, the UAE, and also from Bahrain. Could you just explain to us this changing phenomenon in terms of the profile of investor?
I think the first point that I would like to make is that essentially, even today, the new entrants are definitely important, but the big guys, whether the US investors, the European investors, are still today actually the most important investors. So let's not forget about this, that actually still the developed world has not given up in Africa, and actually they're accelerating. But the growth numbers from the new regions is higher, and for one simple reason: if you are an entrepreneur out of India or out of the Philippines or out of the UAE, your risk profile, or at least your tolerance for risk, is higher. You're coming from a region where you have been growing your business 10 to 20% annually in terms of earnings. So that's basically your benchmark. Your benchmark is opportunities where you have double-digit growth numbers. And you see, because of that, they have a higher tolerance or higher appetite for growth countries where basically the environment is not settled yet. Just to give you a point there, is recently we spoke to a Chinese investor, and basically they told us the story is that for them Africa is actually a safer, better place to do business than Europe, because they can work in an African environment, but they're far more difficult to work for a rather bureaucratic, settled environment as we have today in Europe.